you ever pay for something with your phone, transfer money using an app, or check your bank statement online? Then you're already part of a multi-billion-dollar industry. So it's called fintech, and changing economies around the world. Fintech is short of financial technology. Seems simple, right? Well, the term fintech includes a huge range of product, technologies, and business models that are changing the financial service industry. It refers to everything from cashless payment to crowdfunding platform to robo-advisor to virtual currencies. So every time you donate to someone's Kickstarter campaign, that fintech, or if you transfer money to someone using Venmo, that's also fintech. And that's just the beginning. Here is a major fintech conference in Amsterdam. Hundreds of companies are trying to disrupt the banking and finance industry by changing the way we pay and borrow money. And investors are buying it. So a global investment in the fintech sector has added up to nearly $1,000 billion since 2010. In 2017 alone, in fintech investment surged 18%.
Startups focusing on payment and leading technologies received the majority of the funds. It's just not startups that are getting into fintech. Some of the world's biggest companies from Apple to Alibaba are going big on it too. Just think or Apple Pay or Alipay. One reason or investment consumer adopting fintech fast. 1 out of every 3 people across 20 majority economies report using at least 2 fintech services in the last 6 months. China and India are leading the way with more than half of customers using services like money transfer, financial planning, borrowing, and insurance. Financial technology has filled a void for people around the world who don't have access to traditional banking service. In fact, it's estimated nearly 2 billion people worldwide are without bank accounts. Now, thanks to fintech, all you need is your phone take out a loan or insurance.
You can just access their M-Pesa account directly on their mobile phones to transfer money, pay bills, or take out a loan. Today, an estimated 96% of households in Kenya use M-Pesa, and one study found it has helped lift roughly 2% of Kenya households out of extreme poverty. The rise of fintech has forced traditional lenders, insurance, and asset managers to embrace new digital technology. For example, wealth managers now have to compete with robo-advisors, which are automated financial planning services. Talk about rise of the robot, right? Thanks to high-tech algorithm, these services are available 24/7 and can be more affordable than traditional asset managers that have explained why robo-advisors already have billions of dollars under management. Like any growing industry, fintech isn't without risk, and some regulators have struggled to keep up with the fast pace of innovation. Think of peer-to-peer lending platform where individuals borrow and lend without going to a bank. Compared to traditional banks, these services might not be required to set aside as much money in case customer default and their loans. This can be risk for the companies and customers. Data privacy is another major concern. As more financial services go digital, cyber attacks become a bigger risk. The challenges of facing financial technology are likely to grow as more and more businesses go digital. But for many of the companies and the consumer here, fintech is more than buzzword.
Thank you so much for watching our video. Bye!